Welcome to another video, guys. Today we're going to be going over our trade recap for Asia session. It was a nice 2.3 hour trade right at Asia open. So we took this trade here at 8:02, and as you can see, we actually didn't close the trade here. It actually came a couple more ticks lower, then retraced back into the trailing stop loss. So the execution was actually there. So just bias for the position was just the massive, at the end of the day of New York, it was just massive selling off pretty much all day. There was really just a one directional move, giving us recession type activity is the best way of in my opinion. It's not financial advice. Read the disclaimer. Seek professional help. But yeah, based off how Friday ended, we were just basically selling off, finishing off the orders from the sell-off on Friday. So as you can see here, we had the new week opening gap there. I should probably change this a different color or something. Let's go like that. Not too. So new week opening gap opened up. Actually, there's a wick there, so I wouldn't even. Yeah, it all depends on what time frame you're on, but manipulation up, we accumulated for the first few minutes. Accumulated all through here. Manipulated up into the gap, and then first sign of change of direction. So we had that manipulation, market structure shift. So any price level under here I would be interested in. So that would be, and then we zoom in, and then we see we got the market structure shift coming from an area of interest. Get in closer. We had our first sign, fair value gap, retracement, price pulled into the fair value gap or SIBI, and then price continued to give us lower lows, slight retracement, and then this is when I started to pay attention, because we are inside a breaker, because I'm assuming that I'm determining that this is our consolidation there, which would make this our manipulation. And then to really solidify my bias, I'm actually waiting for price action to really tell us what it wants to do once we are in this area here. So as soon as price starts to come into this, at this point it's still a breaker, because it could still potentially come up and do some type of rejection move, as you know normally order blocks do. So I'm not assuming that this is immediately going to break through, retest, and head towards sell side, or this most recent low, which is sell side liquidity. So I waited a little bit. We got confirmation here, second confirmation that we were going to reject. Delete that there. Price pullback gave us the bearish market structure shift, right? Pull back into this SIBI, giving us another rejection signal. And then that's when sell pressure really started to kick in. really swept this low, retraced, came again into this area here, retraced, and then price started to get really violent here with very deep aggressive pullbacks. I'd say massive orders came in. It went through another consolidation, all while respecting this high here. Mark that out. Respected this high. Market structure shift. Low, high, low, high. Market structure shift again. And then I went in for the short here. Just a lot of rejection here, as you can see. From here to there. No closes above this area here. And then at the market structure shift, at the close of that candle, we went in for our short trade. We didn't end up adding on any trades on these fair value gap entries, although they would have been nice nice trades as well. But nevertheless, I think it was a very clean trade. That was the rest of. Now, if I would have held to a 3R, would have looked something like this. And before actually getting there, we were starting to climb back up. So I think I took the trade out. Pretty good area. Not bad at all. But that was pretty much the analysis. I don't normally, you can normally just look at it without drawing all this stuff on there. And plus my indicator draws what I need to see. There's naturally confluences that you can draw out and keep on your chart. If you are the type to forget, or if you're still in your learning phase and you need to be able to see, okay, my bias is bearish, I'm looking for this or that. So having your chart marked out with what you're seeing, what has happened, and you're drawing liquidity is always definitely something that you should do, a good habit. And if people are watching you trade, if you're explaining things to people, it's good to, you know, draw these things out on like real time so that they can see what's going on and actually have time to digest it and like make it click. But now that trade recap is pretty much wrapped up, we can go do a little Friday recap. Very interesting day. Very interesting day. So we came into 9:30. 9:30 was a instant manipulation. So 9:30 was right there. Came in. Deep retracement. Market structure shift. So drawing your fib from the finish of that move there, from the market structure shift, once that kind of closed, then we had the consecutive long candles here. Drawing that fib there between 62.79 is ideal area of retracement before going into your or looking for positions for that trade in your bias. So which would have probably been bearish, I would like to hope to think that at this point, from the last, I don't know, few weeks, that we're not looking for we're not really looking for bullish sentiment, because this was already in February 18th. We've dropped massive amount of points. We're all the way up in we're all the way up in 22,000, and now we're all the way down, almost at record lows. So pretty crazy. So yeah, we had a little bull, but bull market, I wouldn't even call this a bull market. It was just, naturally we retrace, we rebalance, stuff like that. We went in, took this, all this liquidity that was built up here and here, just to come back and finish selling off the market. So just knowing that, and you can tell, look at the indicator. The indicator is really giving you all the opportunities. I'm gonna plug the indicator, of course, naturally. So you see here, this is on the M15 chart. So came in, Asian, trickle down, market structure shift, pull back into this fair value gap there. If you are a swing trader, stops above the high, taking this short here, stops above the high, taking that short. Then we had a 9:30, this is 10 a.m. actually. So 9:30 manipulation, or was the start of the reversal. Drop down to the lower time frame, you can see the market shift, fair value gap entry. But since we're on the higher time frame, there really wasn't any entries that could have been taken until noon. Noon would have got you this entry here. Stops below at the candle here. I'll zoom in a little better. Stops below here. Then you can take that entry all the way up until close. So you would have taken this entry here to target this Asia high. Intraday. Swing trading, obviously there's no trades that can be held past a certain time, which was like 3:10, I believe. 3:10, 4 o'clock. Market close, obviously. Going into the next day, you had clear entry there, pull back, fair value gap entry here. If you stretch this one out here, tap in, close, candle below the low, get in, pull back, add on. Pretty much the whole entire day was straight bullish. So pretty hard to miss unless you're a reversal trader or doing some type of reversal setup at specific time. If you're trading another concept or another entry model, and it's something you'd probably get cooked, maybe. So moving on to the next day, we had Asia session, swept the low. Could have gotten trapped here. Could have gotten trapped there. So it didn't take that high. If it took the high, I would have gone down to lower time frame to see if I could capitalize on this short. I'm sure that there was some type of entry that could have been taken using this inverse fair value gap, pull back into that fair value SIBI, and then aimed for Asia low. But the overall bias at this point would have been bullish, or to at least come take this buy side liquidity. So we wouldn't have taking any longs, at least on this time frame, until we at least got into the breaker. The breaker there. So that's actually there. And as you can see here, we had the area where the signal was generated, which was there. If you guys can see that, we had the rejection, came down, and then continued higher. I was inside the breaker. Could have targeted this high here, which was previous day high. And then, as you can see, we had the major manipulation back into this area. 930. Price came up, came back down, swept that again. Swept this low here. And continued higher to take out another buy side and to finish off the day taking on another high. So it's really about getting on this side of the trade when trying to aim for the new highs. And that was that day. Not sure if we had news, but it was one of the first days of the week that just had a massive sell-off. So we had our collection of bear signals. So this also really helps determine bias on generally where the market wants to go when it continues to not only give us those highs, protected highs, but also how it's rejecting off the direction it's going after rebalancing. So internal liquidity, external liquidity, if you guys know that concept, you guys will understand that we go from internal to external, internal to external. So a lot of this internal, we're seeing the result of it reaching internal. And what is it doing when it reaches internal? It's going back to external. Internal, external, internal, going back, external. This is pretty deep, and at the end of the day, sometimes you do get deep retracements where it comes and sweeps the highs, the liquidity on the highs, and then continues to go down. But it's all subjective to the needs of the market, and when it needs liquidity, it's gonna grab for it, regardless of the model or the understanding of internal, external, internal. It's not gonna specifically follow those rules when it needs liquidity. When it needs liquidity, manipulation occurs. Big banks or whoever is pushing in those orders or sending orders in will send the orders in the direction of the most amount of liquidity to get those orders filled on either side of the market, and then continue to go in a direction that it needs to go long term. So in these cases, you'll see that a lot of times, majority of the time, it'll follow the direction of liquidity, of generally where the market wants to go. And in times of the need of liquidity to continue to push the market where it needs to go, it will go in the other direction to grab that liquidity, just to continue in the direction that you need to go, where the market needs to go. So you guys attempting to try to find the tops and the bottoms, this is where you guys are getting liquidated, because when you see this and you see a price is actually breaking highs, and then you want to try to be a little more smarter and take your trades down here to go long, not realizing that, okay, we're still technically bearish long term, but you want to try to catch the bottom or catch the top, and you guys are going to try to buy here. You guys are going to try to buy. You're going to see these two candles, you're going to try to buy there, or you're going to try to buy this candle here. when at the end of the day there's just not a long-term direction, and their objective is not really to trick you specifically. Their objective is to get orders filled. So it's your own interpretation, and how you're interpreting price is the reason why you feel personally targeted, and that you feel like they're coming specifically at your stop losses. So don't let those people telling you they're hunting stop losses. They're just hunting opposite orders. That's all they're doing. And if you happen to have a trading style that allows your stop losses to be majority of the time where liquidity needs to be reached, or where liquidity grabs may potentially happen, you're gonna feel like they're coming after you personally. I did also do that for a long time, and I realized that, and I stopped doing it. So Wednesday we had a massive sell-off. Really, your super early entry would have been here at 8:45, really early in the morning. 8:30 started to pull back into this higher time frame, which was the M15 fair value gap right there. Took a nice little short, stops below the high. I mean, no one knows it was going to drop that sharply, but I'm sure you would have been able to capitalize on something at that point. Even that would have been a nice, a nice, stops below the high, nice 2.3 R, targeting the sell side liquidity for, what is that, 47 points, almost 50 points. Not bad at all. Or you can trail and held and targeted this swing point here, sell side liquidity there. Like I said, that's kind of reaching, I would say. Because if you're seeing trades like that, guys, if you're seeing trades like that, and people talking about, I knew it was gonna do that, you gotta be a little suspicious. Be realistic, man. Be realistic. I mean, like I said, hey, people could do it. It's been done, you know. Some people shooting 10R trades. It's pretty awesome, but majority of the people not really doing that. So, but realistically, logically, aim for that low. That would have made sense. You could have sit and trailed, maybe. If your model allows it, you could have taken this entry here. This would have been like super little drawdown in this case. I don't know, you probably would have put your stops at the equilibrium of this fair value gap instead of all the way up there, depending on your risk management. Like I said, those specifics are subjective to how you trade, what your risk management plan, etc., etc. And then this day was a mess. Day was a mess here. What was that, Thursday? Yeah. Just to get our amazing Friday, where everything was just like one-sided, real simple. Reached 2 standard deviations. Let's drop right back down to the 1 minute. Let's see. And you can just see, you guys just look. You guys can see the arrows. Generally, the arrows are pointing in the right direction, because it's not based on anything more than directional bias and internal external. Like, look at signal there. Like, yeah, sometimes you'll get signals like this where it pulls back into the fair value gap, and then you just get a deep retracement. At the end of the day, if you know better, which I know you do, you wouldn't be taking trades that are so far away from your initial market structure shift unless you're adding on. So this wouldn't even be your first trade. Like, honestly, the signal came over here. So let's just say hypothetically you're not being, the best analyzer, which it happens to all of us, and you wanted to try to take a trade like that. At the end of the day, you kind of want to have your trades in alignment here. You don't want to be taking, you want to be taking the market structure shift fair value gap entry. There's not one here. Or for confirmation, wait for the break structure, market structure shift here, entry here, which we didn't get a retracement here deep enough in order for there to be a signal for us to target either this high or whatever high was available at the time to trade towards. So these are just some trades that you should not be taking anyways. Even though they are there, you got to use a little bit of your discretion, not too much, but it's just something you want to keep in mind when you see signals like that and you're like, oh, wish me well, why are the signals there like that? Like, what am I supposed to do with that? It's not accurate, it's not perfect. Yeah, no trading out there, no trading indicator software is that perfect unless you're working for the $1 billion guys. I'm not working for them, so I don't got state-of-the-art equipment. But like, perfect example here, if you have a bearish bias, right? Bearish all day, and you just happen to want to be trading PM session. If you're bearish, you wouldn't be taking any bullish market structure. You wouldn't even be paying attention, first of all, to any bullish market structure, right? Let alone any signals. You would technically be waiting for realignment. So that would be your bearish market structure shift. That would be your bearish break structure. That would be your bearish fair value gap entry. You say, wish me well, why is there a signal there? Because there was a fair value gap there, rejection there. In this case, depending on where you put your stops, taking this leg here for a nice scalp, maybe. I don't think that this would have worked out, but after sweeping, getting a false market structure shift to the upside and getting a market structure shift to the downside with the fair value gap entry would have been a more ideal trade there. If you guys have your ATR as well, you guys would probably not be aiming for anything super crazy. You would at least, even this trade, there's no trades after, honestly, yeah, there would have been nothing here. I don't even think you could be trading after 3 or 410. But it's more ideal to wait for highs to be swept. That's the breaker block entry. Market structure shift to the upside. So we're just a little illustration. Whoa. Forgot I have that on sometimes. So you have market structure shift to the upside, market structure shift to the downside. Ideally, this is what you want to see, especially in times of consolidation. You want to see that market structure shift here. And then you also want to see the market structure shift to the downside. And this is taking into consideration that our bias is bearish. So that's telling us that we just took some buy side liquidity, and we also got confirmation that we're done and we're moving bearish. We also got a nice retracement back into discount. Let's just say we traded off equilibrium of the breaker, and if we have a nice bearish fair value gap or SIBI, we can go and use all those confluences to tap into a short, stops above the high, targeting a nice 1 to 2 RR. That's ideally what we want to see, what we're looking for in cases like this. We didn't have the breaker in this case, but we did sweep these highs here. Sweeping this liquidity there gave us the market structure shift to the downside. After our market structure shift, so we did get the market structure shift to the upside, but it wasn't, this wasn't the cleanest example for that specifically. So we got the market structure shift, so we drew our fib for retracement purposes, discount purposes here as well, giving us our options to either take entries off of here or there. We didn't actually get the signal. We actually got it here. Stops would have been a little big, but thank goodness for second charts. Utilize your second charts if you can. Most definitely utilize your second charts. Oh, I don't have my signals look back that far back, but retracement, we saw market structure shift here. So we're actually looking for our entries here, and we didn't actually get any pretty decent retracements on the 30-second, but as you can see here, we had our market structure shift to the upside, market structure shift to the downside, and this final area here, which could have taken our shorts. If you have a fixed risk to reward ratio, I normally at this time currently I do 100 ticks and either a 1 to 2 RR or 1 to 3. Taking a nice 1 to 3. Trail stops. Nice little entry there. Yeah. Or you could have target your first standard here for 5R, second standard for that 10R. That right at that 10R, our standard, that second standard there, we actually, it's the first sign we get a retracement, a deep retracement that broke highs here. It was right at that second standard. But yeah, that was pretty much the week. I just went through the week. I wasn't planning on going through price action for the past week. Just wanted to do Asian, but you know, it's always good to go over price action. You gotta love what you do, you know. You gotta love this. I don't mind talking about price all day, but yeah, so this was a trade. This was the Asian trade. It looks like right here, again, perfect example. We actually took my trade out right before it completely reversed, but we did get opportunities to get in and out there. So got a nice little breaker, market structure shift, nice breaker there. So we could have actually took a short or long position, maybe somewhere around there, potentially targeting this high. That could have been something we could have done, but we can't be in all trades at all times. But that's a nice little setup there if it was taken. But alright, thank you for watching. Like and subscribe, and I'll see you guys in the next one.